Today, we are reviewing one of the most interesting and underrated projects in the field of DeFi, Frax Finance. Unlike conventional decentralized protocols that offer a single product, Frax creates an entire financial infrastructure in Web3. This is not just a token or a liquidity pool, it is a full-fledged ecosystem of stablecoins, liquid assets, staking, lending, liquidity management, and even its own blockchain. The main idea of Frax has always been simple: to build a decentralized financial market that can compete with centralized services in terms of stability and efficiency. And judging by how Frax is developing every year, the project is really moving towards this goal. Let's start with the main product, the Frax stablecoin. It is one of the most stable and technologically advanced stables on the market. Unlike conventional stablecoins pegged entirely to the dollar, the Frax model was initially partially algorithmic, which gave more flexibility in managing liquidity. Over time, the project has become more stable and fixed a model that makes Frax one of the most reliable decentralized assets. But the most interesting thing about Frax is not the stablecoin itself, but its infrastructure. Frax has created frxETH or frxETH, one of the most popular and effective staking assets in the Ethereum ecosystem. Today, FRxETH and frxETH occupy a huge market share among stakers and continue to grow. They provide users with a stable income without difficulties, and the Frax protocol receives a strong monetary base. In addition, Frax has its own blockchain based on optimism technology, called the Frax Chain. This is a huge step forward because now the Frax ecosystem is completely autonomous. The blockchain is optimized for working with stablecoins, liquidity, staking, and integration with other protocols. It's fast, cheap, and fully consistent with Frax's vision of creating a global financial tier. The FXS token is the heart of the entire ecosystem. It is used to manage the protocol, distribute income, and participate in the Frax economy. Thanks to regular burns, usage, and ecosystem growth, the token has become one of the strongest assets in the DeFi sector. Many analysts consider FXS to be undervalued, as the development of the Frax chain can dramatically change the demand for the token.
The Frax ecosystem is developing very fast. Liquidity pools, credit markets, staking, collaterals, cross-chain integration, and its own monetary policy model make Frax more like a Web3 digital central bank than a conventional DeFi project. This is a unique position in the market, and it is becoming noticeable to an increasing number of players. Of course, Frax, like any serious project, has its own risks. The ecosystem is large and complex, and any market change can have an impact. It is important for developers to control the liquidity, protocol security, and risks associated with stablecoins, but the Frax team has been successfully passing market stress tests for many years and proving the sustainability of its solutions.
As a result, Frax Finance is one of the strongest DeFi projects of the new generation. Not just a token or protocol, but a full-fledged infrastructure that combines stablecoins, staking, liquidity, and its own blockchain. And if the DeFi sector continues to develop, Frax has every chance of becoming one of the key systems in the global crypto economy.